Hi everyone, I'm Kunal Sodhani and I'm once again back representing Shinhan Bank. And let's unfold with respect to the currency pairs, also with respect to macro analysis, and also what is lined up ahead and what's our view on several currency pairs. So starting as we do with domestic factors, first of all, let's discuss about the trade deficit numbers. So if we talk about the trade deficit numbers, it came at around $19.8 billion. And if we see the last 5 months, this is the lowest trade deficit number which we have seen. If we also talk about the annual trade deficit number for 2022, it was roughly around $108 billion. And if we talk about 2023, it's roughly around $69 billion. So all in all, if we talk on an annual basis, we see a decrease of around 36%, which means the trade deficit has narrowed by 36% on a year-on-year basis, which is definitely a good sign for us. Exports still being there, but imports have been declining. So that is one of the major reasons of the trade data coming or the trade deficit numbers coming lower. If we talk about the FPI flows for the year 2023, we had seen the all-time highs of 1.71 lakh crores of inflows. And if we talk about the 2024, which is January month, till now we have seen an inflow in equities of around 6,000 crores, and in debt we have seen inflows of around 13,500 crores. So they have been selling off lately in indices though, but we still remain bullish when it comes to flows, at least for the next couple of months still to go. Third, if we talk about the FX reserves, the FX reserve definitely did tick almost, if we talk about the fiscal year, we saw a rise of around $55 billion of rise in the FX reserves. Though if we compare to last week, we have seen a dip of around $5.8 billion, which means the FX reserves currently standing around $617 billion. The all-time high, which was seen in October 2021 of $645 billion, is what we eye. So even while the central bank governor's speech, we have been observing that they are keen to avoid any kind of uncertainties and try to build their kitty as much as possible. So our opinion still remains that we will definitely touch the all-time highs in terms of the FX reserves and surpassing $645 billion as well, considering if the inflows in equity and debt continue to persist in the right way. Uh, if we talk about the global factors, I think two important factors actually have to be watched out. Is the dollar CN, that is Chinese yuan. If you see the Chinese yuan have gone from almost 7.10 levels to 7.22. It's like a slow poison and a silent killer kind of a thing, which definitely affects rupee as well. Obviously, there remains the problems when it comes to their housing sector, when it comes to the debt cleanup of the real estate sector and of the government. So these criteria are still there. In fact, the private sector is also weak. So considering these 3 points, we still see pressure on CNH, which in turn possibly have some pressure on rupee also. Though if we talk about a GDP number that came in at 5.2%, which was higher than the expected number of 5%, though it's a good number, but still I think the weakness still possibly may prevail as per what we speak on ground reality. Second thing which we want to discuss is about the Brent crude prices. They have been hovering around maybe 77, $78 per barrel. So briefly between 77, maybe 75 to 80 is what we can broadly say. But any kind of crisis when it comes to the Red Sea, which we have been observing, there have been news feeds about it in terms of, the delay in probably the transit time being increased, the freight cost going higher, the insurance cost probably going higher as well. And apart from it, the transportation cost at overall level is obviously then going higher, which definitely can have an impact on our trade deficit numbers also, though it has narrowed to 5 month low. But going ahead, it definitely can have an impact there. And also globally, if this persists, the logistical issues, then overall it will have an import and export trade relations which may not be flourishing as it has been doing in the past. So it is a key event to observe and keep a tad at according to the decision making when it comes to currency pairs. Also, if we talk about Fed speakers who have been speaking, majority of them, what we understand, is possibly more dovish, where the expectation is still remaining that it's too fast to say for a faster rate cuts coming through for 2024. The anticipation as per the CME Fed Watch tool is around 50% of a rate cut for the month of March and for the month of June. Like no one is expecting a rate cut happening on 31st of January when the Fed policy is there. So that is from the Fed perspective. As for the FOMC, what happened last time, three rate cuts are already there, but the pricing in terms of markets are around 5 to 6 rate cuts. So I don't know how do we perceive that, but as of now, we will continue to stick with our in-house view of three rate cuts at this point in time also. Overall, when I talk about the dollar rupee trajectory, we did see a low of around 82.80 levels recently, and then a quick bounce toward 83.20 also. So what we understand even technically as per charts, 80 to 70 acts as a very, very crucial support zone. Considering the global economic turmoil when it comes to even China, there are feeds from China and Taiwan military actions. Also, when we talk about the Red Sea crisis, so taking those into cues, there will still remain pressure on rupee, though we may see both side of movements, which definitely helps an importer, to hedge at lower levels around 80 to 80 levels. So my suggestion still continues to remain as we discussed last time also, and the view has been going the way we are thinking. To for importers, around 80 to 80 levels are decent levels to have their conversions or maybe hedge some portion of their exposure. For exporters, couple of times we are getting an opportunity of around 83.20 to 83.40. In between those levels are good levels to hedge some portion of their near term exposure at least. So we would stick to that point. For dollar index, we are seeing 103.80 acting as a very crucial resistance. It has been reversing from those levels. And if I break down into currency pairs, for euro dollar, we feel 1.0820 level acts as a very important support. And one can go long at around 1.06 or 0860 with a target of 1.0960. While for dollar yen, we expect one can short at around 148 half with a stop loss of 149 half with a TP of around 147, big figure. So and if we talk about the GBP dollar pair, I think still it is sell on rise when it if we are able to see levels of 1.2750, decent levels to sell for a target of 1.2640. So these are personal views in nature. It's not any kind of recommendation as such. Overall, what we observe now is the key important data from the US still to be more watchful because the data have been quite positive. So going ahead, what data points plus the policy will be taking the center cues from Indian perspective? 1st February, the budget will be out, so that will be an important cue to watch out. So that's all from my side, friends. Thank you so much and wish you all a very amazing week ahead. Thank you so much.